Hey everyone, Coach Investor here with another episode of what happened this week in the stock market. Now, I already covered a couple of companies during the week, such as AMD, Pinterest, and Unity. You can find those videos in the top right corner. And as for PayPal, I know a lot of you have asked about it. This is going to be a special video on Sunday. So, a lot of things actually happened this week. Google reported earnings, Facebook, Snapchat, Amazon, and then some rumors that maybe Amazon is looking to acquire Peloton. So we're going to discuss all of that in this video. Also, this video is sponsored by the Daily Upside, a free financial daily newsletter that you get every morning in your mailbox. You can read that in just 5 minutes. If you want to subscribe to it, it's free. Link will be down in the description and in the pinned comment. So first order of business, and that's Google. So Google obviously crushed earnings. They reported earnings per share of $30.69 versus estimated $27.34 and revenue of $75.33 billion versus estimated $72.17 billion. They also announced a stock split 20-1. So if you didn't have access to fractional shares and you wanted to buy Google, but it was too expensive, $3,000 for just one share, when the stock split happens in July, I believe, it will be much cheaper. Doesn't really change the company, it's just more accessible to retail investors. So let's have a quick look at those numbers. Revenue increased 32% this quarter and 41% for the full year. Operating income 29% for the quarter, 31% for the full year. And then the net income for the quarter came in at $20.6 billion. And then for the full year, $76 billion. And as for the various segments, so Google advertising being the largest one, Google Network growing quite nicely, YouTube ads still growing at a great pace. It's actually generating more than Netflix right now. And then Google Search and others at $43 billion. Google Cloud is also growing quite nicely from $3.8 billion to $5.5 billion. Very, very nice growth there. And like we said, total revenue grew from $56.89 billion to $75.32 billion. And just to confirm, the stock split, everybody that holds shares before July 1st will receive the appropriate amount after the close of business on July 15th. So that was Google. Obviously, the market reacted accordingly. Things were going the right way. But then came Facebook. As you know, Facebook reported earnings. Stock went down 23%. Never thought I would see such a giant company lose 23-24% of its market value in just a matter of minutes. But it took everyone with them. Everyone that has a little bit of advertising or a lot of advertising as their business went down as well. Pretty crazy. You can say it's really like a casino right now. But Facebook's reported earnings were revenues of $33.7 billion, beating the estimates of $33.4 billion. Earnings per share missed $3.67 versus the estimated $3.84. So they missed by 4-5% or so, but the stock crashed 20+%. Doesn't really make that much sense. Daily active users 1.93 billion versus 1.94, the estimated, so flat, let's call it. But the big reason why the stock went down heavily is because of guidance. So they guided revenue growth of between 3 to 11%, $27 to $29 billion versus the estimated 16% growth of $30.2 billion. It's also the first time they show us the Reality Lab segment has grown quite nicely quarter over quarter. Year over year, as you can see here, was $717 million. Right now it's 877. It grew, but a lot of people probably expected to grow much more. But then again, this is just the start. They did lose $10 billion on that segment, which is also one of the main reasons why earnings per share missed, because of all their new expenses with regards to Reality Lab. If they did not want to invest that much in that segment, they would have beaten earnings per share quite comfortably. Now, during the call, they talked about the main challenges the company is facing right now. Number one, IDFA. 1 year ago, didn't come into effect yet, so those year-over-year comparisons are extremely hard to overcome. Second half of the year would be a better way, an easier way to compare if Facebook is managing to go out of this struggling period, let's say, or, well, the business thesis is basically changing and they have no way to provide better data for advertisers, small businesses that use that platform to advertise their services and products. Second is obviously TikTok. TikTok is extremely big and growing extremely fast. It's also a tactical way of saying it during the call, basically telling Congress, look, we're not a monopoly anymore. There is this other guy that is already super big and still growing extremely fast. Oh, and guess what? It's not even an American company. It's a Chinese one. So maybe a tactical play here. Yes, their investment in Reels is maybe taking away some of their results in the usual business, the core business, the feed on Instagram, etc. But it's something that they needed to do, right? TikTok, everybody likes it. YouTube Shorts is also extremely popular right now. So investing into Reels might pay off in the long term. Now, they did say one important thing with regards to the Oculus Quest, the Reality Labs segment, and that's the fact that they are seeing real traction with Quest 2. People have spent more than $1 billion on Quest Store content, helping virtual reality developers grow and sustain their business. This is just the start, already spending $1 billion, pretty impressive. Like I mentioned in the past video, they also had a strong holiday season, and Oculus reached the top of the App Store for the first time on Christmas Day. In 2022, we can also expect a new release of a high-end virtual reality headset, and they continue to make progress developing Project Nazare, which is their first fully augmented reality glasses. So although this was probably the first quarter Facebook really disappointed, in my opinion, with the amount of money that they are generating, with the huge size of the business, yes, it's the first time actually that they are losing users. But then again, how much more can Facebook grow its user base right now? Maybe we're in this type of inflection point where the older generation, which never had Facebook to start with, is sadly going away. The younger generation is maybe too young to adopt Facebook or any of its products. Some are going to TikTok, staying on YouTube, etc. But let's not kid ourselves. Facebook still has, 30-35% of the world population using at least one of their products. So let's not forget that. And even if they stop growing their users, they can still monetize them more and more. Now, before I move to the next part, so the Daily Upside is a free business and investing newsletter that over 200,000 people subscribe to, myself included. Instead of pushing clickbait financial titles and biased coverage, the Daily Upside provides actionable insights and clarity on the stories shaping the business world. It has become the first thing I read in the morning. It's about a 5-minute read, so it's not that long, and they aren't afraid to dive into the hot topics and give a real, high-level, unbiased analysis. Recently, I have also been enjoying their weekly edition newsletter that goes a level deeper into niche industries, so that's great if you have time on the weekend to read a bit more. As someone who looks to stay on top of news to create videos just like this, I can't recommend the Daily Upside enough, so if you want, you can sign up using the link down in the description below. It's free, you can always unsubscribe later. Alright, and now next up is another giant, and that's Amazon. Amazon reported great earnings per share of $27.75. Obviously, that was largely due to their investment in Rivian. If you exclude Rivian, that came in at $4.80 approximately, which was still ahead of the estimates of $3.88. Revenue came in at $137.41 billion versus estimated $137.55 billion. Now, I do want to show you one crazy number. So this is for the full year 2021. Net sales increased 22% to $469.8 billion. It's very close to $500 billion in sales. And if they continue like this, it's going to surpass that $500 billion in sale, which is, it's crazy. Those numbers are becoming incredibly hard to understand. Right now, the various segments. Obviously, I talked about this in the last video. The bottom part is the fastest growing parts of Amazon. The top one, the online store and physical store, aren't growing as fast anymore. So online store grew 1% to $66 billion, physical stores 16% to $4.68 billion. But then let's go a little bit further. Third-party seller services, 12%, $30.32 billion. Subscription services, 16% growth, $8.1 billion. And then the most impressive part of their business, in my opinion right now, besides AWS, is the advertising services. They grew that business 33% to $9.71 billion. Remember how much YouTube has made? Amazon's ad business right now is generating more than YouTube ads, just so you understand how big this is actually becoming for them. AWS still growing extremely fast, 40% to $17.78 billion. Then the other segment, 19% growth to $710 million. So obviously right now, if you just look at Amazon's e-commerce side of the business, the online store, yes, it's not growing as fast. And a lot of people just don't understand the newer part, the faster part of the business, which is AWS, the advertising side of the business, which everybody praises Google and YouTube ads for its super fast growth. But everybody forgets how fast Amazon's advertising side has actually become. It's pretty crazy that it's already right now bigger and generating more money than YouTube. And lastly, obviously some rumors that came in late on Friday, the fact that Amazon is exploring an offer for Peloton, Nike also weighing in a bit. Peloton stock soared up 26% after hours or so. Now, if you ask me, for Nike, it's going to be an incredible deal if they manage to acquire Peloton. For Amazon, it's probably going to be a story of adding those members to Prime membership, so a Peloton Prime membership, because Peloton has over 2.5 million connected subscribers. So it's not a small base of paying subscribers. It's a very big one, actually. Company right now is worth, I think, $10 billion or so. I don't think they're going to sell for $10 billion, if you ask me. Earnings are coming up next week. We already know some of the numbers that is coming out. Maybe guidance would surprise a lot of people, or maybe they might even say, yes, somebody is buying us out. But I don't really think they're going to sell for $10 billion, especially not with the brand they had. It's a premium brand with cult following and millions of subscribers. So there you have it. That's all that happens this week. Next week, another big week. Obviously, I will cover some companies during the week, and then same thing, new episode every Saturday. Now do share your thoughts of this week down in the comments below. You can talk about every company you want. I will try and answer to all your comments. And if you enjoy this type of videos, give it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.